If we learn anything from ARK Invest, it's that it's extremely difficult to beat a benchmark even with seemingly unlimited resources. Now, somebody recently asked why we cover ARK Invest, and that's because there's a lot that we can learn from ARK's approach. So today we're going to look at why their Zoom to $1,500 prediction may not happen. And this article here from June of 2022 says ARK's expected value for Zoom video communications in 2026 is $1,500 per share. Now, it's not over until the big, beautiful woman belts forth a tune, but Zoom shares would need to increase 2,580% in the next 2.5 years for this prediction to come true. So we can take a look and see how they might have missed that badly. Now, ARK open sources their research, and they say they've open sourced their Zoom model to strengthen the quality of their research, and by sharing their assumptions and modeling methodologies, they hope to solicit constructive feedback and criticism. I don't see a lot of people doing that. There are a lot of ARK critics out there, fair weather friends, when ARK was up 500%. Aunt Cathie could do no wrong. Now she's in the penalty box. And this open source research they're hoping will lead to more robust and accurate research than that would be conducted behind closed doors. And that's what we do here at Nanalyze. It's just a whole lot less sophisticated. So for every investment we make in our 37 tech stock portfolio, there's documentation as to why we've entered those positions, and the ones we sell, we document that as well. Now, how does the sausage get made when it comes to valuing companies? Well, a lot of the instant analysts out there don't spend much time looking at these valuation models. They've probably never done anything like this, but there are lots of ways that you can value a company, and ARK has put one together here. It's on GitHub. Anybody can access it. It's linkable from that blog post. You see here it was published in June of 2022. So we open that up, and right away, we can start to figure out what's going on here by looking at total revenue. So what they've done here is something that's very simple. They've taken the total number of users that use Zoom, and I'm going to assume that you know what Zoom is. If you don't, you can search our website for our most recent piece on Zoom and learn about what they do. So take the total user base of Zoom, multiply that by something called average revenue per user, what they say ARPU, and that you see $356. That's the average revenue you're getting per user per year. You multiply that by 146 million users, and you arrive nearly at the total revenue you see there highlighted under 2027. That's what they're expected to get to. 2022, that's their revenues more or less today, because they actually haven't grown. We'll talk about that, but 4.1 billion. So that's a big jump there. So what we can start doing is testing these numbers. So they're assuming 832 million global knowledge workers. Well, Gartner estimates the number of knowledge workers in the U.S. at over 100 million, but over 1 billion globally. That was back in 2021. So these are essentially people who shower before work. Now, how many will use teleconferencing? Well, according to Gartner's estimates, they think about 480 million. Now, how many will use Zoom? Well, Zoom currently boasts a 57% market share. That's up from 2021, actually. So let's say 274 million Zoom users. Can Zoom monetize half of them? Well, they think they can. So here you can see the bear case expected value, that's the $1,500, and the bull case. So you see there then that ARK thinks that total paying Zoom users as a percent of total users, so the total Zoom users there in purple, total paying in black, will eventually, it looks like, will exceed half, and that along the way, average revenue per paying user, ARPU, will be going up as well. So when we look at the price predictions, what we can start doing is this. We can try to back this out so that the average revenue per user is the same as it was in 2021. So would be the percentage. You see in red there, those are all the variables that we can change. So essentially, assuming users and ARPU stays the same gives us a value of $109 a share for the company versus $56 today. So on June 1st, 2022, around the time ARK published this, Zoom traded at 108 per share. So we've been able to get to that previous number. Now, how has it been going for Zoom when it comes to revenues? Well, they flatlined. So you see here in 2021, they did quite well at 326% revenue growth because of the pandemic. And then in 2022, when ARK was putting this model together, they saw 55% revenue growth. But look how it plateaued. It went to 7% in 2023, 3% in 2024, and 2% in 2025. So it's just absolutely stalled. So what we know so far is this: revenue growth has tailed off. Now, possible reasons here: well, declining users. They could be losing market share, but we know they're not, okay? Stable or declining ARPU, that's probably what's happening here. And also the valuation has fallen. So expectations of future growth are understandably much lower based on what they've been doing. They have a simple valuation ratio of 3.8. That's simply market cap divided by annualized revenues. Existing customers for this company are not spending more money over time, right? How do we know that? Well, they provide us with the net expansion rate for enterprise customers. You see that highlighted along the bottom there. Look at it went from 120% in the second quarter of fiscal year 2023 to 99% last quarter. That's bad. 100% means that your existing enterprise customers are paying you the same, which if you take inflation into account, that means they're actually paying you less every year. But when you go under 100%, that's a problem. Usually what that means is they're able to find a cheaper substitute. They don't find enough value in your product to pay you what they were paying you before. That's a big deal. So as growth prospects decline, valuations will fall. And if we look at ARK's ARPU estimates, try to understand how they arrived at such large numbers. You see here their downside scenario there along the top assumed no growth in Zoom's webinar events, Zoom Rooms, Zoom IQ, and Zoom Contact Center. So these are different modules of Zoom's products. Then look at their base case below that. You see where they've plugged those in. So the first problem here that you can see is that the downside case from ARK showed double-digit growth in ARPU. That's a problem. Your downside case should always reflect something that isn't good, and double-digit growth is pretty darn good. So they must have had a lot of conviction in Zoom when they built this model, perhaps speaking with Zoom management a little bit too much. And here you can see where the average revenue from paying users, I suppose they call that average revenue paying users versus, I was saying, average revenue per user. You see here the downside assumes double-digit growth. That's not a very bearish assumption. Then their base, 26% compound annual growth, and the upside, 36%. But look at where it's coming from. The light green there is webinar and events, and the darker green is AI-enabled products and services. So what's interesting is when we look at the different tiers for Zoom, you see their tier that's just above free, what's called Pro, has an AI companion, and it's free. So the extent to which Zoom has used AI so far is simply to supplement their existing offering instead of adding AI products. I'm sure they have plans to add things down the road, but for right now, it's not going so well. And look at this. They had this in their latest investor deck. I thought it was pretty telling. They say, Q1 milestone, so surpass 700,000 customer accounts enabling Zoom AI Companion as of today. Well, yeah, it's automatically there. It doesn't mean people are using it. You see that the Pro tier here is just above the free level. So those people don't have a choice. As soon as they're paying Zoom some money, they're automatically using Zoom AI Companion, according to this. Now, what this tells us, though, is that they have 700,000 accounts, at least customer accounts, because that's what they've said here. So if we do the math on that, then the average revenue per account, what we call ARPA, maybe a better measure, and we'll look at why, is $6,428. That's not very much. So what we can then do is start to deduce some interesting things. These are all calculated based on what Zoom tells us, okay? So they say 30% of their revenues come from customers spending over $100K. Great. So there's 3,883 of those customers, and we can divide that by 35% of revenues, and the average revenue per account is $347,000. So That's some decent enterprise spend. But then when we look at this second bullet point, it says 58% of their revenues come from enterprise customers. Okay, so they say they have 191,000, and they recently changed that. The number dropped quite dramatically, so they reclassified the others as online. But anyways, they have 191,000. Let's minus out the ones paying over 100K, all right? And then we'll subtract from the revenues of those bits. We say 58% of revenues minus the previous amount gives us an average revenue per account of $6,733. That's not very much for an enterprise customer. That doesn't get you in front of decision makers. Then they say this, 42% of their revenues come from online customers. Well, that leaves us, minus enterprise, 509,000 accounts. Average revenue per account, $3,713 or $309 a month. That's something you put on a credit card in petty cash. That isn't really meaningful. And you can bet that a lot of their support costs are coming from these online customers they have to deal with. And really what they should be focused on are enterprise. And you see them sort of making that shift as a business. Now, if you're ARK and you're going to take the time to build such a sophisticated model, make that model match metrics we can monitor. Because guess what? Zoom doesn't tell us total users. They don't tell us ARPU. They don't tell us any of that. So what we then have to do is simply look at revenue predictions from ARK and try to match that to Zoom, and it doesn't work very well. Now, we wrote this piece back in July of 2022, right around the time ARK came out with their Zoom prediction. And we said here that, I like this sentence, one of our core mantras at Nanalyze is that if 95% of professional investment managers can't beat a broad market benchmark, it's highly, highly unlikely that an all-night session of let me Google that for you will lead you to the next Microsoft or Google, meaning for retail investors to think that some weekend research is going to help them beat the market. They're misguided. So in that piece, we looked at competitors for Zoom, and here's an updated refresh of the Gartner Magic Quadrant. You see them alongside Microsoft, and that's a bit scary. And here's why. So look at Microsoft Teams. It says free plan, none. It's like Microsoft Teams is pure enterprise, and their most recent call, they talked about how Teams usage continues to grow with more than 320 million active users using Teams to chat, collaborate, meet, and call. So they talk about a new version of Teams that's 2 times faster while using 50% less memory. They've had 9 consecutive quarters of triple-digit revenue growth for Teams Rooms. More than 10,000 paid customers now use Teams Premium. So they have all these different apps. This is pure enterprise, no dinking around with freemium business models for Microsoft. Now, going back to that piece we wrote in July, we said regarding this model that it's a monstrously cool piece of work that any MBA would wear with pride. But we pointed to the same problems that we see today. So their estimate of Zoom usage was taken from SimilarWeb, which isn't that great of a tool, to be honest, said 212 million users. And then they took that number and divided revenues to get ARPU. But as I said before, it's entirely unrelated to the metrics that Zoom provides investors. In other words, there's no way we can track the success of the model's predictions aside from arbitrary share prices and, of course, overall revenue growth. And we put this chart together that showed what Zoom's path to $30 billion should look like. It's nowhere near that. And we said even the bear case, $30 billion in revenues for 2026, that was the bear, appears like a bull in disguise. So no doubt, and we question that. Now, just to conclude here, your bear case should always be a proper bear case. I think that was a mistake there. And there's little upside to having a super aggressive bull case aside from all the attention that you're going to get, which is a good thing, of course. ARK's model's disconnected from Zoom's metrics. That's a problem. And customers are spending less with Zoom over time, which going back to that ARPU metric, it's going directly against that. The big value driver that was supposed to be their AI-enabled apps, well, it's not there yet. Lots of small accounts make for lots of work because guess what? The people who pay the least are usually the most demanding clients. Now, forget about ARK for a second. Is there value to be had here investing in Zoom? Well, here's the deal. Growth will have stalled for 2 years now, right? So you could say, well, double digit is what we find acceptable. So it's going up on 3 years. They're not disrupting anymore. they're possibly being disrupted. So we'd say this probably isn't a company that we'd want to invest in. Now, we recently did a piece on ARK's performance. I think a lot of the people that watch that will be watching this, so I'm not going to link to it. But those who did watch that ought to go check out this letter. She just published this today. It's What We Do, a letter to investors from Cathie Wood, and it talks specifically about performance, and it addresses a number of the things that people brought up on that video. If you go down through the comment section, it's very interesting. So what I am going to leave you with is this video on ARK's master plan. I think that's worth watching. It details a lot of the themes that ARK is bullish on and that we find to be quite bullish as well. Whether or not you're going to make money on those themes is a different story. So please make sure to share this video with your friends and enemies. Subscribe, like this video. Thanks so much for taking the time to watch this today.